Did the Federal Reserve just say they weren't going to support the market anytime soon? In today's video, we take a look at what this means for us as traders and investors as markets rally even on potentially bad news. Could this all be part of a bigger trap? Yes, it looks like Bitcoin is breaking out and some other metals are starting to lead, but maybe the truth is in the Nasdaq. Let's break down everything that's going on right now, from stocks to commodities to cryptos. And boy, oh boy, is there a lot happening. Guys, we'll see you in a moment. Well, welcome back, everybody, to The Daily Show. My name's Tom, and we have a lot to discuss today. From Apple announcing AI search to Google getting sold off that news, and then semiconductors absolutely going wild. We started to see real leads here from some of the hottest sectors. But what about the Federal Reserve? Can we rely on them anymore over the next coming months? Are they even going to do a rate cut anytime soon? Well, as we can see here in the statement tracker and Jerome Powell's actual statements themselves, he really was basically saying they're going to be late. If I was to summarize it, I would say they're committing to be late as they are looking for the data to show cracks in the economy before doing anything about it. And this basically always means that they'll only come in and patch things when something breaks. And why is that? Well, it just basically came off as the Federal Reserve has absolutely no idea how tariffs and the current economy are going to be affected. You can see by the changes, they're acknowledging that there are several things that, of course, are already affecting the economy. It's holding up well, but at the same fact here, they're going to judge that the risks of higher unemployment and higher inflation have risen overall. They scrapped a couple of things as well from the statements, but most notably, basically Jerome Powell was saying, don't look at us right now, look at the administration. So now everybody's eyes will be on Trump's next moves and realistically what the US government is doing. That becomes now the most important factor. Another thing we'll be tracking here is, of course, whether we actually do see QE. A lot of people have been talking about it, but I had a chat to some of the best names in the business, and realistically, I think from this standpoint, we're not really seeing the type of action that would constitute QE just yet. We'll update over the next coming weeks, because remember, what Jerome Powell says and what they do is totally different. And that brings us to our next point here, which is what are the hedge funds doing? What are the institutional clients and what are retail doing? Now, we've shown already on a chart, JP Morgan have shown the largest amount of inflows ever recorded when it comes to retail. We have been conditioned to buy the dip, and boy, oh boy, are we buying the dip. So far, so good. And of course, that rally. Institutional clients are starting to sell off pretty heavily. And obviously hedge funds, well, we don't usually track them very well because, as you guys know, their stats aren't really that good over a 12, 24, or even 10-year period. The big thing here, though, is that retail is buying the dip hard, which does open up the possibility of some form of liquidity trap relatively soon. We've discussed this current level, which we still trade in, but could we actually still go higher, make a higher high, and trap off at that level? Well, according to the latest data here from Jury and Timmer, you can kind of see when we start to go underneath the 200-day moving average, it kind of highlights these red zones. And he's got kind of like a line going through here that often you'll find when the markets do rally, they tend to start struggling around this area, at least initially. Now, the good news is for bulls is we've got breadth. We've got many good stats that we'll share today. And of course, we've got the possibility of tax cuts, deregulation, and tariff reductions overall. The good news for the bears is that we've just had an epic rally up. And of course, we don't really see any deals being done just yet. And that does come up to be a big factor when you consider what is most likely going to happen in the future with markets. What goes up generally does have pullbacks. And right now, it is ripping. Of course, we saw 9 consecutive gains, 2 days down, 1 day up so far. And what this really tells us is that we are in a kangaroo market, most likely for the rest of 2025. Could we reach an all-time high? Absolutely we could. But the chances of big sells and big gains are becoming higher and higher and higher, as we already know this particular year was expected to be that way based on the stats of 2025. Now, when I mention good news for us as bulls, why is that? Well, when we see information technology leading, that is a great sign. When we see something like banks leading, that is also a good sign that the market is starting to recover. And you can see here, when you've got information technology stocks leading the way, that usually means that we are in a much better leadership deal in terms of overall breadth. And that's why we've been watching that chart from semiconductors versus the SPY. And it had a great 24 hours, really showing that, yeah, it looks like we do have some form of sustained bullishness here, and that pullbacks, as we suspect anyway, probably need to be bought at least at this stage. A lot of that also comes back to tariffs, though, because as we know, with tariffs, there are always the same concerns. Now, let's have a look at earnings right now, because the most anticipated earnings for this week still are going. We've got Shopify, Coinbase, Trade Desk, Cloudflare, still some big names out there. And as you guys know, these will be large moves. So just remember, like we've been seeing, the options market is pricing in some huge plus minuses in terms of expected moves, and we are seeing some big trades there. Now, before we get into the dark pool activity, I did want to mention that used vehicle values are actually upticking once again. And this is really, I think, a direct consequence of people front loading tariffs. What we've already had many stories of from you guys out there is that if you go into certain hardware stores, people are going ballistic buying and renovating their houses. When it comes to used vehicles, people are buying them and starting to compete. And for the first time in a little while, we've actually seen an uptick in prices on used vehicle values. Now, why could this be? Well, it brings back an interesting point, and I think something that we need to consider, that we believe there could be between 3 and 6 months of a lot of the inventory in the US already stockpiled for valid reasons ahead of course, Liberation Day. We also know that, of course, some things are going to run out over the next few weeks, and that's going to be in the stories. But we need to remember that generally the way tariffs work is that we do see tariffs usually are being a tax. Taxes, of course, raise prices over the short term and cause inflation. That usually means that people front load and start to buy into tariffs because they're scared of the prices in the future. And then, of course, what happens is higher prices ultimately crush demand, and that lower demand causes deflation. Now, how does that deflation end up? Historically, if they all stay on, usually in recession. But you've got to remember this takes time, and markets love to trap money all the way through this timing thing. Could it be 6 months? Could it be 9 months? Could it even be a couple of years? In the past, we've seen sometimes where tariffs literally have taken 1.5 years to cause the recession because the economies were quite strong coming into them. So, yeah, we only have a few history points, but it's something to keep in mind. What do you think, though, guys? If we do have 10% tariffs across the board, and let's say ultimately a 25% tariff on China, will we see a recession caused by these? Was it already ordained in terms of the markets were already going to do it? I'd be really interested to know your comments down below. Let's now talk about the area we're in. We obviously know we've seen some large transactions, but I haven't been able to track any new ones. So, of course, we've had the 12th largest here on the QLDs. Microsoft has traded a lot around that level. We've seen TQQQ around the zone that we face ourselves literally at the time of this recording. And again, a lot of potential sells that have gone on there. And it does make sense to the 1998 narrative. But could it be that we actually go higher and wipe highs before coming down? Similar to a 2022 style where we actually took the highs and then got brutally assaulted by the market as it absolutely collapsed, actually making a new low after that. In this case, of course, we have Zweig, breadth thrusts, and better things to hopefully hold us up, plus the semiconductors. But are we going for the second zone? We'll take a look at where that is in just a moment. But just to update anyone that doesn't know, Zweig breadth thrust considered the best breadth thrust of all when it comes to being a bull, triggered about a week and a half ago today. And that, of course, has led on to some pretty big buying across the street and many retail traders. We know that since the 1950s, it's had an amazing track record. But coming with the other stats, I think this time is going to be a little bit more subdued. That's why we're talking about up, down, and all around market, because I think we're going to get a lot of these 5 to 10% moves, both to the up and downside, throughout the year and possibly into 26. Now, gold to silver ratio, we've talked about this several times, but I just thought I'd mention it through. Gold's been doing well, silver's been starting to pick up, and Bitcoin has just broken to the upside. Could it be leading the charge? One thing we know is not leading the charge is central bank liquidity. Now, again, we're going to be looking for the balance sheet, and of course, we'll be tracking that very heavily because central bank policy, not just the Fed, but central bank policy around the world, as we see liquidity injected in the system, that's going to support any rally we've got here. This rally is basically caused by buybacks right now, retail flow, and obviously just a general amount of buying from the street that is caused by, algorithms getting involved in CTAs, etc. Momentum-based trading is here. The S&P 500 did technically do a little island reversal only a few sessions ago, but now we find ourselves smack bang in the middle here. And it does open up the idea, could we need to wipe 5,800 first? Now, this is a poll that I'm going to ask you guys. Do you think we're going to 5,800 first? Do you think we'll sell from here? Do you think we'll just keep going up and it's never going to be stopped and this thing's going to V-shape to the moon? Generally unlikely. But all of those possibilities are there. If the market does go to 5,800 though, you do need to remember that generally markets will pull back. So you always usually get a secondary chance. Feeling FOMO at key zones, never a great idea. And this is, of course, a very key zone. When we look at the futures, here are the updated options high and low levels, which we always want to pay attention to. We're now above the most traded zone, and you can see here the markets are ripping in after hours as we're seeing semiconductors particularly lead the charge. So could we be going for 5,800 first, wipe a high as we come down and we actually hit the support? And I just want to kind of mention this as well. There's a difference between the semis and the NASDAQ and the S&P 500. And this is why we always use the S&P 500 whenever we're doing our analysis. Notice that barely the US 500 dumped below, and I'm not even talking, I wouldn't class that as any type of break, frankly. And then, of course, it comes back up during the Fed's interest rate decision and announcements. And you can see here that we didn't really trigger any shorts. And that's that patience, react, don't predict. Like the zone, certainly. Obviously, if you're going to short it, potentially options. So you've got the time for it to come back down and wipe highs. But this is a very interesting candle. And when we look at the NASDAQ later, you'll see what I mean. Let's have a look now at the options. A lot of puts coming in, guys. People were going bearish through the session. Maybe that's why the market wants to go up. 5650 is the call wall for the next 24 hours, then 5700, and that will take us into positive gamma. So there's a chance here that we could go positive gamma. To go really negative, we're going to need to get back at below 5560. And at the moment, we are around 5660 at the time of recording. Tesla, you can see here again, starting to play kind of between the 270, 300. 300 plus breakout's going to be a big gamma squeeze. And NVIDIA, the most important stock when it comes to semiconductors, bouncing back up, most traded zone, 115. We sit there, we always say 115, 120. So 120 plus, positive gamma, could be a massive breakout. Now let's take a look at the leads here and what's going on. And you can see that basically the US 30Y is stuck within a range, so not too many updates there. The overall idea of options, what are the options and bond market doing? Not too much of a spike up yet. So again, not any kind of disconnect here. The other bonds indicator I've got still just holding the same, so very neutral. We saw a little bit of weakness the other day, but nothing to really write home about. We also want to do a quick update here on home builders. Did home builders dump off? No, home builders just sitting around the resistance like everything else. And of course, that is a fine sign if you're a bull. US dollar, still weak, still underneath the daily 20, which is of course important, and still theoretically in the potential of an inverse head and shoulders, but no breakout equals no risk on for the dollar. And at the moment, the bears are in control of this pair. And that's worthwhile noting when you're looking at things like gold, which continue their very strong runs up here. Gold maybe 3,600. Hey, maybe we're going to get it now after that huge sell-off the other day and nice rally zone. And silver coming off a good little 32.40. Actually, to the point here, one of the members of our private community, congrats to you. You actually picked that one pretty much perfect. 32.40 over the last 24 hours. And obviously that was your typical buy zone. And so far, so good. Looking for a new high. Obviously, we want this thing above 34. 34, 34.50. Silver might be literally getting some kind of like massive tagging on X and massive videos being made on YouTube and TikTok and everything else, because at that point, we could see an absolute bonanza of short squeeze. But for now, it's just stuck, still in an uptrend, still looking hopefully towards bid. US oil struggling to get through $60.20 a barrel, which is where the buy zone is, of course, from a technical base, but still, I think it's too much of a geopolitical risk. Tesla on the bottom of its end, 270, obviously where the buyers are, 300 where the sellers are currently, 300 plus going to create that gamma squeeze. So that could be an interesting event. And NVIDIA, the highest point for a little while, starting to make its move up to 120, which is ultimately this big resistance, 120, 121. Could we be going into positive gamma? We're still kind of at the same points of resistance. But what was very positive, I think, even if we now get pullbacks, is semiconductors versus the SPY. While we're not above the 0.4 ratio, which is ultimately the big swing investment loan for a lot of investment area for a lot of people, this is still a very positive sign, breaking the downward trend and obviously showing that semis are leading. When semis lead, hey, that's usually a great sign that there is a risk on. And that's regardless of your opinion of the news or anything like that. Remember, at this stage, the market does what it wants to, and the market will make as many people seem as stupid as possible before going off in the more logical situation. And that's why we could also see that new higher high. It's a possibility based on the NASDAQ anyway. HSI, this is the Chinese market still rallying up. We're still bullish on, of course, the 12-month aspect of China because their central bank is absolutely ripping money into the economy. And of course, they are doing everything they can to benefit from making new deals and doing all sorts of things all over the world. Z is literally everywhere right now, and everyone else is trying to get deals done. So the big thing here is that China is just, they will plug all of the US hole if needed in their GDP just by stimulus. They'll do whatever it takes. I'm pretty sure of that. And of course, the market is kind of thinking a very similar thing. So obviously, the market will do what it's going to do there. US 2K, you can see here 2000 is the resistance. We're still at the same level, so no breakout yet. But I think the more interesting chart is the NASDAQ. And the NASDAQ did something very sneaky. Google goes bad, Apple, search, AI, whatever comes in. To be real, I don't think that's that shocking for Google. But anyway, I don't even think it's new news, to be real. But you can see here that we've got the NASDAQ. You've got obviously this very strong consolidation. You certainly have a potential hunt here by the street to trap shorts into the market. And now it's squeezing higher. And that really opens up this level up here, which is around this 20,350, which is pretty much, I think, if you were to complete this range, yeah, it's going to easily pop through that. And it could even go towards, oops, I'm just going to grab this for us so we can extrapolate that out. Yeah, so it could even push towards 20,600. It is possible that we could go there. Right now, I would not want to fight this unless I was using an option. And that's kind of the point that we've been talking about. We do see dark pools here. We're not seeing more though. 2 days ago was the last one we got a really large print. So I'm trying to get updates on that. We've got Bitcoin breaking out right now. We've got kind of bad news from the Fed, frankly, even while I'm talking about this video. So this is the type of market that we're in at this stage. We are looking for a trap. I do believe there'll be a pullback relatively soon within the next couple of percentage points. But the thing is that we cannot deny that there was most likely a hunt over the last 24 hours by the street. Speaking of which, we've got Bitcoin moving very heavily towards 100,000, which has a lot of crypto traders very excited. Could we be looking for an all-time high? Are we going to get to that 120, 125 that I've spoken about several times? Are we going to get to 250,000? This is what everyone's floating all of a sudden. I'm not sure about that, but certainly Bitcoin has sometimes led the way, and so far it's risk on, at least from the tech semi side and from the Bitcoin side. And we'll have to see what updates over the next 24 hours. We're looking for more dark pools. We're looking for the traps. At the moment, the trap literally seems to be on the sell side because of the NASDAQ, not the S&P, but the NASDAQ. And it triggered that type of short that some people would have been looking at and then just ripped off Powell's comments. To be real, I think we've lost the Fed for now, and it's really just all about the US government because Fed said, well, we're not going to do anything unless they're doing QE, and we'll look for that in the sneaky way in terms of liquidity injections, and we'll update. But unless they're doing that, realistically, we can not really assume that he's going to say anything now for quite a few months. So it's all about the US government, all about tariffs, all about flow, and all about trapping. And that's what we'll be looking for over the next coming weeks. Thanks so much for watching. If you enjoyed today's video, remember to subscribe and of course, smash that like button. Also follow us over on X. I posted several of these charts so you can have a look at them in more, I guess, of their full screen glory. And realistically at this moment, we are just literally looking for those signs. So this is why we often say patience, react, don't predict. If you're in shorts or whatever you might be in, long shorts, whatever, just remember, always risk manage. Main thing is options if you're not too sure about whether something is activated. And that, of course, always allows you to not have necessarily, get hit on the stop losses if you know what you're doing. Obviously, take your own risks and, good luck, guys. Thank you so much. We'll see you in the next video, and we'll be looking to see what the street is up to, especially this week on the close. Bye for now.